Best crypto to buy now 27 July, Synthetix, Pepe, Maker. Mark Yusko, the principal of Morgan Creek Capital Management, a fund management organization with $1.6 billion in its custody, shared some thought-provoking predictions about the future value of Bitcoin today. He sees the most prominent cryptocurrency achieving a value of $300,000 by the end of 2028, raising some eyes in the crypto space. Today, as the markets remained relatively stable. In light of this, what are the best cryptos to buy now? Speaking with CoinDesk TV's first mover, Yusko commented gold is not as adaptable or divisible as Bitcoin. The digital asset resolves these issues and has equivalent scarcity. Therefore, I believe Bitcoin could match gold's monetary value. Gold's worldwide monetary value currently stands at around $6 trillion. Yusko's forecast suggests that Bitcoin could supersede this, indicating a potential tenfold surge from its present price. This concept gives rise to an estimated future valuation of $300,000 for each Bitcoin. Yusko maintains that this speculated price could materialize by 2028. His prediction relies heavily on Bitcoin's halving cycle, which takes place approximately every 4 years. The halving events imply a 50% decrease in the rewards that miners gain for successfully creating a new block on the Bitcoin blockchain. This mechanism helps to control Bitcoin's supply, potentially easing inflationary pressure on the cryptocurrency, Yusko explained. The next halving is expected around April 2024, and then again in 2028. Looking at historical data, Yusko's optimistic stance derives from the pattern of Bitcoin's price trends following each halving event. Every halving we've added a zero to Bitcoin's price. Therefore, I predict that we could see a price of $100,000 by the next halving in April, he stated. Yusko's forward-looking conjecture aligns with the perspective of other Bitcoin supporters. Among them is Standard Chartered, the British banking titan, forecasting that Bitcoin could reach $120,000 by the end of this year. Despite a challenging past year, Bitcoin has shown resilience with a 76% increase since the beginning of the year. It currently trades around $29,187, a rebound following a 64% dip in 2022. Due to their resilient fundamentals and positive technical analyses, Synthetix, BTC20, Pepe, chimpzee, and Maker are some of the best cryptos to buy now within the existing market conditions. Synthetix SNX consolidation amidst bullish momentum. After bouncing off the 20-day exponential moving average EMA and Fib 0.382 level, SNX demonstrated a positive move with a 2.87% increase yesterday. SNX is currently consolidating on the second consecutive day of gains. Despite this, it appears that the cryptocurrency is facing rejection at the Fib 0.236 level at $2.906 for the second time. Technical analysis suggests that the immediate support for SNX lies at the Fib 0.382 level at $2.661, closely followed by the trailing 20-day EMA at $2.640. On the other hand, a formidable resistance zone lies between $3.148 to $3.303, and crossing this barrier will be a significant bullish indicator for the token. The 20-day, 50-day, and 100-day EMAs are all below the current price of $2.853, indicating an overall upward trend. However, traders should note that the MACD histogram has moved from 0.019 to 0.004, signaling a potential bearish crossover. This development could imply that the recent bullish momentum may be losing steam, and a period of consolidation or a slight pullback could be on the horizon. Additionally, the RSI has moved up to 63.32 from yesterday's 60.04. This suggests that the token is currently leaning towards being overbought. An RSI value above 70 typically signifies an overbought condition and can sometimes precede a price correction. While the technical indicators present a mixed bag of potential outcomes for SNX, traders are advised to proceed with caution and consider the potential for a short-term consolidation period. Watch for potential breakthroughs in either direction on high volume, which could indicate the path of least resistance moving forward. Always remember, however, to combine technical analysis with solid fundamental research to make the most informed trading decisions. Buy Bitcoin at 2011 prices with BTC20. BTC20, the Bitcoin on Ethereum token, is steaming towards its $6 million per sale target, having already raised over $3.4 million in just 9 days. Powered by its combination of high staking rewards, Bitcoin derivative appeal, and Ethereum's solid technology, BTC20 is attracting a large influx of buyers. The presale could even sell out within days at its current rapid pace. BTC20 offers a rare chance for investors to buy Bitcoin at its 2011 presale price of $1. Yet BTC20 improves on Bitcoin with its energy efficiency, staking yields, and access to Ethereum's DeFi ecosystem. According to Google Trends data, BTC20 is already rivaling the top meme coin Pepe and even Bitcoin itself in search popularity during active trading sessions in European regions like Germany. As FOMO builds, some believe BTC20 could follow in Bitcoin's footsteps, which has climbed over 29,000% since 2011. BTC20 will distribute newly minted tokens to stakers, unlike Bitcoin, which gives newly mined coins to energy-intensive miners. Staking BTC20 will be as simple as depositing tokens in a smart contract. Ethereum's shift to proof of stake slashed its energy usage by 95%, making BTC20 far more eco-friendly than Bitcoin. BTC20 will also benefit from immediate access to Ethereum's DeFi ecosystem. With influencers like Michael Rubel believing BTC20 can make investors millionaires, it's easy to see why the presale is blazing toward its target. With strong demand for BTC20, there are high expectations for a dynamic launch on DXs once the presale sells out. Pepe Coin insights into prevailing bearish sentiment. Despite reaching an intraday high of 14,448 cents, Pepe now trades at 13,261 cents, down 0.48% so far today. Interestingly, this downtrend has been marked by a bearish hammer candlestick pattern, signaling potential selling pressure and trend reversal. This is further bolstered by its rejection from the 10-day EMA and the Fib 0.5 level at 13,732 cents, indicative of stronger bearish sentiment. The bearish tone is echoed in the EMAs across different time frames, with Pepe trading below the 10-day EMA 14,180 cents, 20-day EMA 14,658 cents, and the 50-day EMA 15,006 cents. This signifies that, in the short term, the market sentiment leans toward the bears. As for the RSI, it currently stands at 39.99, a marginal drop from yesterday's 40.32. This hints that the coin is nearing the oversold territory, suggesting that the bearish momentum might be overextended and a potential price bounce back or reversal could be on the horizon. In the case of the MACD histogram, a slight improvement from minus 0.00000000371 to minus 0.000000360 was observed. This minor increase implies a possible reduction in selling momentum. However, the persistently negative values signal that the bears still control the market. Looking at the market cap and trading volume, a drop of 3.63% and 0.16% respectively suggests declining trader interest, which might lead to reduced price volatility in the near future. Additionally, traders need to keep an eye on key resistance and support levels. The immediate resistance level is at the 10-day EMA 14,180 cents, and beyond that, there's a significant resistance zone between 14,658 cents and 15,284 cents. This area coincides with the 20-day and 50-day EMA and the Fib 0.618 level at 15,050 cents, thus making it a formidable barrier for the bulls. On the flip side, immediate support is found at the Fib 0.382 level 12,414 cents, which intersects with the horizontal support zone ranging from 11,882 cents to 12,425 cents, suggesting a possible area for buying entries or placing stop losses. The prevailing technical indicators for Pepe suggest that traders should tread with caution. Although the bearish momentum appears to be losing steam, the overall market sentiment remains bearish in the short term. Hence, traders are advised to pay attention to the identified support and resistance levels while keeping an eye out for potential bullish divergences in the RSI and MACD. Making a difference with chimpzee, one of the best cryptos to buy now. Chimpzee, a new green Web3 platform geared towards fighting climate change, saving endangered species, and rewarding users, has recently raised over $1 million in the presale of its native token, $chimpzee. The project's presale is heating up. However, chimpzee's generous 125% purchase bonus will decrease after July 31. Chimpzee will now conduct a 50 billion token burn after hitting the $1 million milestone. Further burns of unsold tokens will continue throughout its staged presale. Chimpzee has more to offer than just fighting climate change. Users will have the opportunity to earn potential income through its ecosystem, which includes a shop-to-earn merchandise store and an NFT marketplace. Additionally, a play-to-earn game called Zero Tolerance is currently being developed. Chimpzee has already planted over 21,000 trees and donated $35,000 to charities. A portion of profits from the upcoming merchandise store will go to listed charities. $chimpzee, the token used by Chimpzee, has deflationary properties. Whenever tokens are spent on Chimpzee's passport NFTs, they are burned, reducing the total supply. As the presale progresses, the frequency of token burns will increase, further decreasing the supply. Thanks to the backing of major crypto influencers, chimpzee has the potential for significant growth. The project has undergone a comprehensive audit and is KYC verified with no taxes or trading fees. As the pre-sale deadline nears, now looks to be the optimal time to invest in this green crypto project before the bonus decreases and the token takes off. Maker MKR, navigating bullish momentum amid selling pressure. Maker MKR has been an interesting coin to watch these past few days, with its bullish momentum setting a new year-to-date YTD high of $1,283 earlier today. However, the persistence of selling pressure has led to a retest of the horizontal support zone between $1,153 to $1,183. As it stands, MKR currently trades at $1,155, down by 53% so far today. While the current price movement may feel disheartening for some investors, it's important to understand that retracements are a natural part of any bullish trend. The key lies in the strength of the underlying support and the technical indicators. Looking at the EMA, MKR's trend remains bullish. The 20-day EMA at $1,018, the 50-day EMA at $885, and the 100-day EMA at $813 are all significantly below the current price. This positioning indicates that despite the recent pullback, the overall trend remains in favor of the bulls. The RSI has slipped to 68.87 from yesterday's 73.28. Although this does suggest a slight decrease in buying pressure, the RSI remains in the bullish territory above 50, indicating that the bulls still have some control. The MACD histogram has also slightly declined to 12 from yesterday's 14. This does hint at a potential slowdown in bullish momentum. However, as long as the MACD histogram remains positive, the bullish bias isn't necessarily threatened. The immediate resistance for MKR lies at the YTD high of $1,283. If the bulls can push the price above this level, it could signal the start of another uptrend. On the flip side, the immediate support zone between $1,153 to $1,188 is a critical area to watch. A break below this range may suggest a trend reversal and could potentially be an exit signal for short-term traders. While today's price movement has certainly stirred up the waters, the technical indicators point towards a still predominantly bullish outlook for MKR. Investors should keep a close eye on the $1,153 to $1,188 support zone and the RSI. A sustained break below the support zone and a drop in the RSI below 50 could indicate a bearish shift. Conversely, a rebound from this zone and a push above the YTD high could set the stage for further gains. Disclaimer: crypto is a high-risk asset class. This article is provided for informational purposes and does not constitute investment advice. You could lose all of your capital.